Yeah.
Kielty, plumbing, heating, cooling, celebrating 15 years of bringing comfort to you. Healing Realty, call RJ Kielty, they'll get your system working to cool you down. And if fixing a leak is what you seek, RJ Kielty's service is the best around. RJ Kielty, plumbing, heating, cooling, over 50 years of bringing comfort to you.
Welcome to episode 10, Kielty's Corner. I have a good friend of mine here, Justin Kelly, CPF Mortgage. We've known each other a long time, just a absolutely amazing guy. And most importantly, he's really, really good at what he does. So we're going to first start. I want to hear the Justin Kelly story. So where you started, where you are now, where you're going.
Man. How much time do we have?
we got as much time as you want.
All right. Well, I was born and raised here, right on the water, in Hudson, and I graduated from a private Christian academy, and graduated a little early. Mm-hmm. So I think around the end of 10th grade, I was pretty much done, just going in, checking in, and then doing dual enrollment in college.
Oh, I didn't know that.
Yeah,
I wish I did dual enrollment.
Yeah. I did it, started there, and while that was going on, I was working at a golf course with some family friends of ours. He was a superintendent there, and that's actually was my intention, believe it or not. I was going to go be a golf course superintendent and go to college in Lake City for agronomy and be a doctor for plants and grasses and spend my life on a golf course. And, as fate would have it, I got introduced by my cousin, actually, to the mortgage industry. And he said, "Hey, why don't you just come in and see what it's about?" So I think I was 17. I, kind of started at a local company here with another friend of mine who became a good friend of mine, and sat down the first day, and I remember going, all right, what is a mortgage exactly? Explain it to me. And got set in a room, and it was just like fish to water, man. It was just it was a comfortable thing. I think I had some conversations my first week and got some deals in, and at 17 back then, you worked under the company's license, so it wasn't, you could have a conversation with people and actually originate mortgages. So I started out very young, and so that's what I did. I finished high school, and while I was working in the mortgage industry, and before I knew it, I was assistant manager, and then I was managing a company, and then I decided I needed to kind of slow down and really learn the business myself, and so I spent the next 5 years really learning it well. And I spent my time at a company here in Newport Richey, crafting my skill and learning the mortgage industry. And then from there, I decided to open CPF Mortgage. And so that's how CPF started. And I don't know if at first we were called Christopher Paul Financial. And I don't know, the story behind that, but I'll go over it a little bit. Christopher Paul Kelly was my brother. He's a Marine. And he served our country, and we lost him young. He was in law enforcement. He passed away, and he always loved serving his community and helping people, and was always interested in doing good for everybody around him. Mm-hmm. And so I thought, man, that's really what we do as a mortgage company, right? We're a community outreach company that does mortgages. And so I thought, who better than name the company after than him?
Oh, that's amazing. I didn't know that.
Yep.
I didn't know that whole story.
So at Christopher Paul Financial, we started getting a really good reputation, and so we had people calling us, to finance, motorcycles, cars. They wanted to invest their money, So I'm like, all right, we don't have the right message on who we are and what we do, because we only do mortgage loans, right? We don't do investments. We don't do any of that. So I was struggling with that. I'm like, we really need to think about the name. But being my brother's name, it was like, man, I can't do that. Yeah. I can't change the name. And so my wife actually said, well, why don't you just take the acronym, Christopher Paul Financial CPF, and add mortgage on the end. And so that's how CPF Mortgage came about. I get that question all the time. How'd you get your company name? What does it mean? So that's the kind of story behind it. And then, we started in 2008, which, probably the absolute worst time to start.
Now, I will say though, like if you do a lot of research, all good companies, big companies, if they started during the recession and they survived it, because if you could run during the recession, you could run lean like that, and you could do all the right things.
Yep,
you're gonna make it.
I think it puts your mentality is in a different place, right? You have to learn a grind is completely necessary. Like you have to be in every day. Your mindset has to be very laser focused. And during that period of time, we learned exactly how to service the community through that time. And we learned what loan products and things we needed to focus on to be able to help people and grow at the same time. And so that grind, put us in a really good spot at that point in time. Even though it was really hard, it was difficult. I remember we were putting some desks together, like the last pieces of our office, the day Lehman Brothers shut their doors and people were walking out with boxes and stuff. So luckily enough, I was too young at that point in time probably to realize exactly what was happening and how bad it was. And I just put the blinders on and really focused and tried to pay attention to the opportunity around me. And so we grew through that. And, ever since then, we've taken a step every single year, improved our processes, our people, invested, in getting better, always reinvested in the company. And, for me, I look at it like this is my brother's name. His legacy is his in remembrance of him. And so I always want to make sure we're doing all the right things to get better, improve, and make it a great place to work and also make it a great company for our community.
Yeah. No, you talk about the legacy thing. I could see how important it is to not tarnish his name. I have the same thing. We have our name. My dad started 51 years ago now, so it's vitally important for me to make sure I'm always doing the right things. I'm taking care of our customers. I'm taking care of our employees, our team members, because name's on there. It's not like we have some generic name. The name means something.
Absolutely. And I can vouch for you on that because we actually had some issues at the office with plumbing and I'm like, call Kielty, like get them over here. And so we scheduled it and you guys came in super professional, like on top of things. Your guys were awesome in and out, like explained everything, walked through the process, like did all the right things. I'm like, this is how a company's supposed to be run. So you're doing a great job. And
likewise, and I was going to go over this, but we've had a lot of employees work with you. We've had a lot of, people I've known work with you that have worked with other mortgage companies, and it's just night and day. They're like, they answer the phone, they follow up, they call back. You know what I mean? Like that. I think this world always has had a customer service issue, but especially after COVID, that even got worse. That's why I think maybe we're having some of this little bit of a reset now, but that stuff is the stuff that's going to create longevity in the business. And I know I could say like, hey, call Justin. He's going to take care of you. I know like my people are literally going to call me back and say, thank you so much because he is just taking great care of me.
And that's important, right? So at this point in our path, our career, our company, it's like, we're about doing all the right things, making sure the client is taken care of. And the way I look at it is if you focus on the client experience, taking care of the customer, just being very direct, honest, and open, the business follows, like success follows that. And so we're really focused on being direct with clients, explaining the reality of the market right now, what, financing, what it means, what it takes to put everything together. Like there's too many companies out there, too many people in my industry that want to make everything sound wonderful, rainbows and butterflies.
Easy. Yeah, you'll be able to, no problem.
Get you in the door and then throw you in the process. And then you find out, oh my gosh, they missed this, they missed that. Now I'm getting called during the underwriting process. I'm getting beat up. I'd rather just have the conversation and do all the due diligence up front. Like the way we designed our team and the way we built everything is to give people certainty up front, which is missing in our industry. The industry norm is to just have a conversation with a borrower, pull the credit, scratch some numbers down and hand a pre-approval letter and send them out shopping. Problem with that is once you get to underwriting, you got to provide a whole bunch of documents.
Yeah, that stuff doesn't matter.
Yeah. And, you know, the underwriter's going to look at that. They're going to take the documents and they're going to apply that because they're heavily trained. They're going to apply that to all the rules and guidelines. And then that's when you start getting that, man, they're asking me for this now and that. Oh, they're changing the loan pro. They're saying I need 10% down when they told me 3% originally. And all this stuff is changing on me. And the reason is because they weren't reviewed and vetted up front. And so that's what our process is very different. We have a validation team. We trained them like underwriters, and we invested that money in that team up front. They're not revenue generating team, but what it does is it gives our clients certainty in their transaction. And I felt like if we invested in that, it would show our client we care. And so we would get the loyalty back from the client going, hey, this company goes a step above every single time. And so our client experience is different from most mortgage companies, and that's what gave us our reputation. And we're proud of that. We're proud of the way we structure everything, built everything, and how we deliver on that, because it takes a lot of time, it takes a lot of money, it takes a lot of effort, it takes a lot of training, and there's a lot of logistical stuff going on in the background. Much like here, you got a big operation going on. It takes a lot to make it work.
Yeah. So I talk about this all the time. Lifetime value of a customer. Lifetime value of a customer. That's all that matters to me. If I don't make money on a service call or whatever, okay, I don't make money on it. You know what I mean? The person was shopping or whatever, but I want to do all the right things so that they're going to call me back.
Yep.
You know, I may not be able to retire off one service call, but we literally have people that have honestly worked for us for 50 years. So they call us back. You know what I mean? So having the right consistency, having the right training, having the right people like you talked about, to me is the most important thing, because we care about longevity like you care about longevity.
That's right.
Because that's all that matters. It's so hard to acquire a new customer. So do whatever you can to take care of it. And there's so many companies. I see it on the mortgage side. I see it on the plumbing side. I see it a ton on the AC side. They just want to get their money that one service call, and they don't care if they call back again. Yeah, I don't understand it.
Their model and their mentality is it's a transactions, the transactional based business. It's not a transactional based. It shouldn't be anyways. It should be a relationship business, because when you build a relationship based business, where you're talking about longevity and lifetime client, it changes the entire model, the way you think, the way you, train your people, the way you take care of the customer. Everything you're going to build your business off of is going to be completely different, because you're worried about the relationship, the long term, and farsightedness. And that's one of our pillars, is being farsighted, always thinking about, the future and what's best for the company, our customers, our clients, and our partners. So
what is the future?
So, depending on the context of the question, like where are rates going? What's the future? I can tell you our future is to continue. I can tell you our future right now is continue growth here locally. We did expand into some other states. We went into Georgia, Tennessee, and Colorado. And it's only because we had a lot of our clients here in Florida buying properties in these other states, and we were getting the question a lot. So I'm like, okay, there are clients here in Florida. They're buying second homes, vacation homes. They're moving. We need to be able to, lifetime of a client, right? If they're moving, we need to be able to continue to facilitate that, relationship.
I love that.
And so the growth has gone into other states, but with our focus being here, all our people are here. Like, we come into the office every day. We service everybody from one location, which is very unique. The mortgage industry is really fragmented. Like, most people are working at home.
Yeah, most people are working from home, and I feel like you lose culture. I've always kind of been against that.
Yep, I agree with you.
Myself, even we had COVID and stuff like that, and we had people come in because we literally have a family here to me. You know what I mean? I see it that way.
It's really hard to build a culture and connection, and that's so critically important when you're building a business that's based on relationships, because you have to have your relationships right in your company first before you can have good relationships with other people.
Yeah.
And so I was the same way. Like, during COVID, we were all in the office. We all still came in. We were considered critical, industry. And so, I'm like, I talk to the team. I'm like, look, it's important for us. It's who we are. We're here together every single day. Like, we need to continue that. And don't get me wrong. I mean, we do have some loan officers that are in different parts. Like we have, Miami coverage and other
Venezuela.
states and what.
Yep.
Yep. So it's one of those things like they can feel, because all of us are in the office, like those that are not on Zoom and meetings and all that, they can feel the culture still. And they can vibe from that. And it's important because it helps you deliver the proper experience to a client. You understand how we are internally.
Yeah, I'm about consistency, because I think if you can create consistency, you have the right systems, everything else kind of, you have the right vision, consistency, processes, everything else is taken care of.
Yeah, it all gets worked out, right? And it starts with leadership and goes all the way down to the last person. Like everybody is important, no matter what the position is, because we all have to deliver that experience no matter what position you're in.
Yeah.
So
100%.
That's critical.
So we talked about future of the company, future of the mortgage industry.
Yeah, it's an interesting one, man. From what I see on a macro level, there's a lot of consolidation going on with larger mortgage companies, nationwide. I think there's been what we call margin compression. There's a lot of competition. That competition then starts doing, things for cheaper and cheaper and cheaper, and that compresses margin and causes companies with large cost structure to then have to either do one of two things. They got to lay off a bunch of people, which then changes the delivery of their service, their company culture, like everything, or they have to figure out how to merge with another company and become bigger and stronger. And that's not always good either, because then things change. So I'm as far as where the industry is going and where our placement is in it, I like the fact that we're a smaller company. We're more nimble. These changes that come about with margin, we're already working on a low cost structure.
Yep.
That's how we were built.
Yep.
So it doesn't bother. We've never been charging these huge absorbent fees. We've always been delivering a very, very affordable loan for our customers. So, in my mind, we built the company for this environment. And that's the environment we're heading towards. You
were born in that environment.
I was born in that environment, raised in the fire.
Yeah.
And, we've been able to keep, our model the same and grow because that was our mindset from the get-go, was delivering an affordable, low cost, great experience for our customers. So it was like, that was the right way to kind of structure everything, not grow so big that you have to really start focusing on bottom line as much. I'm more focused on the experience, and I feel like the bottom line will take care of itself.
Yep. No, I agree. So what is the difference between, hey, I'm calling up my bank or I'm going to call up CPF mortgage?
Huge difference.
Yep.
Let's walk through that, right? I mean, a bank, they have a lot of services. They do checking, savings, CDs, insurance products, investments. We kind of call them jack of all, right? We don't focus on any of that. Our sole focus is mortgage loans. So everything we do day in and day out is, how can we do mortgages better? How can we do them cheaper? How can we do them faster? What are the systems we need to implement? What's the new technology we need to develop and implement for our customer to make it a seamless transaction and cheaper? Where the bank is more like, okay, this department, you need to cross-sell, and we need more over here for mortgages. So we need the insurance department, we need the investment department. You need to be hitting your clients up and making sure. And next thing you know, you're working with a bank, and I won't call any of them out in particular, but you're working with a large national bank, and you don't know how long that person has been at that bank.
Yep.
How long have they been doing loans? How long? What's their requirements? Because I know we're required to recertify every single year, get relicensed every year. We got to go through continuing education every year. In order to get licensed, we have to do preliminary education. We have to pass state, federal exams, whereas with bank employees just kind of fall under the bank's, licensing. And so they just have to register with the licensing system. There's not really any requirements for continuing education like on our side. Not saying that the banks don't provide that kind of stuff, but you could very well have somebody that went through a 3-week training program, is sitting on the floor and is now talking to you about loans. And
Mhm.
that can yield a lot of different problems. Like we talked about earlier, you getting a pre-approval, going out shopping, finding the home of your dreams, and now everything is changing, or you get declined because we didn't focus on all the right things and reviewing everything thoroughly up front. And that just comes from having one sole focus, right? We only do mortgage loans. So we feel like we're the best at them.
Yep.
And where we're not the best at them, we're going to work really hard to make sure we are, because that's our only product. That's our lifeblood. That's what
Yeah.
we do. So that's a big major difference. Going even further, going with just a national mortgage company, this large conglomerate, same thing, big machine to feed, right?
That's what I'm saying. That's what I'm gonna say. Their mindset, their culture is sales driven.
Very sales driven. Get them in
Yours-
the door.
yeah,
We'll figure it out
different.
later.
Yep.
Very different. Get them in the door. We'll figure it out later. We'll kick it in underwriting. Let underwriters figure out what's going on and if the loan can be done. Problem is, they're already under contract to buy their home at that point in time. They've probably already given notice to their landlord. They started packing everything up. They have these. They started thinking about the furniture, the colors they're going to do, and then all of a sudden, oh well, you need 5% more down, or we're gonna have to see if we can go back and renegotiate this. And what if you can't? Then we're gonna have a problem putting finance. It puts stress on people through the process, and next thing you know, at the end of it, people hate buying a home. They hate mortgage process. Mortgage companies are terrible, but we don't want to get lumped in with that, right?
No, correct.
So we focus on delivering just a completely different experience for somebody. And a lot of the people that go through our process and our reviews, if you read our reviews online,
Yep.
you can see it's like, hey, easiest process I've ever gone through. I get goosebumps when I read that kind of stuff. Like, this lender delivered everything they said and above and beyond. They were amazing to work with, always answered the phone, always had the answers for me on questions, no matter how silly, like, because it's a big transaction for people. There's a lot of questions that happen, and none of them are dumb. None of them are silly. None of them are little, because it's a transaction that people normally don't do all the time. So what we do every day, and what seems like that's an easy question, might be very difficult for somebody, but we're there to answer the phone. We're there 7 p.m. I took a call the other night. It was 7 p.m. on a Tuesday. They're like, I can't believe I'm talking to somebody, a banker right now. I said, I'm not a banker.
Yep. Don't say that.
Yeah, I'm not a banker. I'm a mortgage professional, and I'll answer the phone at 7 p.m. On my side, I'll answer it. Me, the CEO. I'm not too proud to get on the phones and answer. And weekends, Saturdays, Sundays, like, that's the difference, and that's the level of service. Is when somebody's solely focused on just one thing. We're going to be available, we're going to be knowledgeable, and we're going to deliver service like no other.
Yeah, and like you talked about, I said it once, I'll say it again. Like example would be John Watson. He did the mortgage through your guys. He's a renovation manager, and he came to me after and goes, "Just thank you so much, Tanner." And I'm really, really, just because I like somebody, I'm not going to refer them. They also have to do a good job. You know what I mean?
100%.
Because my name goes on it. You know what I mean? So if I'm referring somebody, I'm putting my name on it. So I don't want to lose respect for that person, or you know what I mean? So every time I've talked to somebody, even if they didn't get a mortgage, they said that you guys have done a good job, called them back, followed up.
Yep.
If they went through the process was as streamlined as can be.
Yeah, and that's music to my ears, right? And sometimes it's like, when we're doing this due diligence up front, we're delivering news that people love to hear sometimes, and then we're delivering news that people don't like sometimes. It's like, hey, you need to do this, this, and this. Here's what we're lacking. Here's what's going to come up in the process, and we need to fix it now. And sometimes people don't like to hear that stuff, but it's the reality. And I think more people appreciate it, understanding up front everything, being very clear, transparent, and knowing what they're getting themselves into before they start the process. And then people who just want to be told rainbows, butterflies, and move. Yeah, just go find a house and we'll figure it out later. It's like the worst.
Well, you've seen it. I mean, how heartbroken is somebody if they go through this whole process, have this pre-approval that really doesn't mean a whole lot, right? Love this house, put an offer in, and then can't have it.
It's brutal.
I wouldn't want to do that to somebody.
We get the phone call. Tanner, I've taken, literally this week, I've taken 3 phone calls from people that were using national people in a bank. I won't mention who, but they're being told now they can't get the loan. One of them was 2 weeks away from closing, and it's a veteran on top of it. They're a veteran 2 weeks away from closing, and they're being told, "Oh yeah, by the way, like this isn't going to work out." Right? They've already probably given notice to their landlord, like figured like moving, scheduled movers, this, that, and the other. And as I'm looking at this, this particular transaction, it's like it can't be done. It should have never been done. There was some things that needed to be worked out and some planning that needed to be done ahead of time before they went out and looking. And now they're in a position where they're not going to be closing. They're not going to be moving into this house.
They could be homeless.
They could be homeless. And, there's nothing that we can do about it now at this point. We could have stopped that up front and told them, hey, here's what we need to focus on. Here's what we need to do. Here's a plan laid out. Here's a timeline. And then we could have had them execute on those things over the next 6-12 months and put them in a position to win. But right now, all that's going through their mind is I'm supposed to close in 10 days, and now I don't have a house, and I can't get a loan. It's brutal. So I see a lot of heartbreak like that. We get a lot of phone calls like that. Some of them we're able to save.
Yeah.
But some, it's like I look at it, and I'm like, they should have never been given the authority and pre-approval to go out and put something under contract. They should have been guided properly. So it's heartbreaking, man. It sucks.
Yeah, that's horrible.
Yeah. Worst part of it.
Yeah. So what are the different types of mortgages?
So you've got a few different types, and then there's some niche stuff. But your basic loans are your Fannie Mae, Freddie Mac conventional mortgage loans. Okay. Then you have government insured loans like FHA, Federal Housing Administration. Yep. And they focus on helping people with maybe newer credit, lower credit scores, maybe don't have as much money to put down. And they dub these the first time home buyer.
Yeah, that's what I was going to ask. Yeah.
But that's not 100% accurate because anybody can utilize that loan program. It just happens to help people who are, first time buyers more than it does anybody else. Yeah. Then you have VA loans. Those are for veterans, obviously. And then you have some USDA, which is for rural properties. There's geographically, it's documented where they can be done, and it's more or less rural areas to help people put together financing in those particular areas. They'll do much higher loan to value, 100%, get people in with no money, little to no money. And then you have some of these types of loans called non-qualified mortgage rolls. We might remember them as being called subprime loans. Yes. And they're loans that are put together and structured where people don't have your traditional type of documentation for income. And they're crafted in a way to help individuals that might be self-employed write a lot of their income off. They're different from our old subprime. Before, the old subprime loans of 2008 that really hurt the market as an overall and put us into that whole meltdown in 2008. They've been fixed for the most part. There's a lot more requirements for people to have bigger down payments on those loans. They have to be, most of the time, have to be self-employed. They're looking at bank statements, deposits that go into there, and there's a formula for calculating an income based off of deposits going into bank statements rather than providing your normal tax returns and things like that. So those are the normal stuff. And then you have, a certain little segment of the market called private mortgages. And these are, private placement capital where, it might be a private investor, an individual like you and I that are willing to fund a loan and do it based off of the equity in the home. Like somebody's putting 30% down and they're only financing 70%. And, they have a decent credit score. Yeah. And they fund the loan based on those requirements. So there's several different types out there, niches in each and every one, but those are the main loan types.
Okay. I've been renting my whole life, and I finally feel like, hey, I want to own my own home. I want to set that, myself up, my family up. What does that process look like?
Yeah. So the first phone call needs to be financing for your loan
don't
officer.
Call your realtor.
Yeah. Don't start looking at homes. Don't start, because you got to figure out, okay, number one, I always tell people mortgages are not one size fits all. it's like a fingerprint, and you have to figure out what your fingerprint looks like. And so the first discovery phone call is just an idea that I have with somebody. Is like, all right, what's your goals? What are you trying to do? Okay, I'm trying to buy a home. I need 4 bedrooms. You know, it needs to be in the Pasco County area. We have 20,000 we've saved up. You know, our credit isn't the best. And we delve into that and get into that. And we get all the information up front. And then from there, what I do is I have my system we built. I'll send a link to them, and they'll be able to securely fill out their information. It's a wizard. It walks them right through it. 15 minutes done. And then they're able to just upload their dot, drag and drop them, take a picture with their phone, and upload them securely to that same portal. And then our system notifies us, hey, John Smith has, you know, finished his application and uploaded all of his documents. And then from there, I look at it and I create a profile for them, and I task it to my validation team. And then they're going to go through and they're going to look at the income, all of the assets, the credit. They're going to look and make sure that the income type that they have is calculated according to the guidelines for the best loan product and program for them. Make sure it fits, right? Because you have multiple types of income. You got people who get piecework. You got commission. You have salary plus commission. You know, you have hourly. You have overtime. You have all of these different income types have to be calculated very specifically for the loan type that you want. It's not as easy as just saying, I make 70 grand a year, divide it by 12. Doesn't work that way, right? And that's a lot of people get in trouble like that because they go to a loan officer, and the loan officer looks at their tax return and says, all right, 70,000 divided by 12. The problem is 30 of that was base salary. The rest of it was commission, piecework, overtime. All of that stuff is different income buckets, and there's a certain formula to calculate that. And if you don't do it right, you can run into some problems.
Oh, I could easily see that.
Yep. So once our validation team finishes their review, they put all their notes in for me as a loan officer, one of my loan officer team members, and they task it back over to the loan officer, and we do a final review, and we take our knowledge, the notes that were taken, everything has been placed, calculated properly, and then we review it all. And then we analyze it and determine, all right, what is the best loan program? What is the best path forward? And then we have the final phone call, or we call it the consultation phone call, where we're going over and reviewing, okay, here's the best path forward. Here's how much you can qualify for. Here's the down payment that you'll need, or the cash you're likely to need for this much of a house. And at that point in time, once we've given them certainty and we know we have a direct path to get them in the home, we then deliver and execute on a pre-approval letter. At that point, now it's time to talk to an agent, start looking at homes, because you know exactly what your price point is, what you can and can't do, and how to get there.
So you do a lot more upfront than most people.
That's why I say it's like a lot of companies don't want to do this because it costs a whole lot of money to have a team like that, and they don't generate any revenue. Really.
Yeah, correct.
It's just to give people
They
certainty.
can just tell people no sometimes, you know?
Correct. Yeah. Absolutely. And so that's why a lot of companies don't do that. They say, hey, listen, get the borrower in, get them under contract, and then put it into underwriting. Let underwriting figure it out, because that's a revenue generating department, right? Because they're underwriting a loan. It's like they have something tangible there. The way I look at it is, why put people through that just to find out they, you know, in underwriting, they can't perform, and get the loan. Like, it doesn't make any sense to me. So, that was a business decision we made, and an investment we made in our client and the client experience we talked about.
No, that's awesome.
Yep.
Let's talk about interest rates.
Yeah.
What are we seeing now? What do you think we're going to see in the future? And how does it affect the mortgage?
Yeah. So the first thing I probably want to talk about is this myth. And it drives me a little insane, right? But I hear it all the time. People are focused on the Fed and what the Fed is going to do, and are they going to drop rates? And so I want to talk about that really quick, because the Fed funds rate is not mortgage rates. It is vastly different. It's the short-term interbanking interest rate that banks loan money to short-term overnight to meet capital requirements. It's a little more in-depth than that, but we'll just keep it as simple as that. Those interest rates are tied to things like short-term loans, credit cards, car loans, boat loans, recreational vehicles, and they affect those rates more than anything. It is correlated to mortgage rates, and I'll tell you why. The only reason, or the only thing the bond market or the mortgage market cares about, is inflation. if you think about it, it makes perfect sense, right? If we have inflation right now, let's just pick a number, 9%. How am I going to take and sell a 7% mortgage to investors every single, like normal investors, right? You're going to say, hey, I'm funding this at 7%, but inflation's 9%. I'm losing 2%.
Yep.
So the mortgage market has to analyze this data and say, okay, how long is inflation going to be here for? Because the average mortgage loan is kept for 5 to 7 years. So at what point are we going to have a return on investment if we fund this loan, if inflation stays for the next 2 years? And so that's how they kind of look at things. So inflation is like a huge indicator. That's the most important thing to the mortgage world. And so
I didn't even know that. That makes a whole lot of sense, though.
Yep. So we're looking at it. I don't care what the Fed does. Ultimately, I care about inflation, because as soon as we get inflation under control, you'll start to see interest rates, mortgage rates come down.
Mm-hmm.
So how is the Fed funds rate correlated? The Fed fights inflation with the Fed funds rate.
Yep.
When inflation starts getting out of control, they raise that Fed funds rate so that people stop spending money on cars and boats and on credit cards and car loans and all the short-term stuff that drives prices up. Mm-hmm. And so when they do that, people stop spending, inflation starts coming down, which is what mortgage cares about.
Yep.
So that's how they're correlated. So just because the Fed does a 0.5% reduction in interest rate, that does not correlate to a 0.5% off in mortgages.
Yep.
It's not the same thing, right? They're correlated, not the same thing.
Wow.
So
I did not know that.
Yep. That's first and foremost. So on what we think is going to happen,
Mm-hmm.
inflation's pretty stubborn right now.
Yeah, it is. Like,
You feel it.
everything correct. Everything I've seen, we kept talking about 6 months ago, 4 months ago, it might start, creeping, but inflation's staying up.
Stubborn.
Yeah.
It's stubborn. And that's the biggest concern right now with the Fed is how do we get this under control ultimately? Mm-hmm. It's not talking about cutting rates, because that is not going to help, right? Mm-hmm. So they want to start seeing numbers on certain indicators that they look at for inflation. They want to see those numbers start coming down. Mm-hmm. And we started to see some things the last few months indicating that, hey, we might be turning a corner here. And then it kind of stopped.
Yeah.
Kind of stopped. So I was saying, like, I could completely see after summer starting to see mortgage rates come down a little bit. And then maybe by summer of not this year, but following year, finding some type of a level or a bottom mm-hmm. at some point in time. But it's going to really depend on all this inflation data. What does it mean, for mortgage rates long term? Everything's going to lean on inflation. Mm-hmm. And so I think if we get through third quarter, going into fourth quarter, mm-hmm. we might start seeing inflation, some of the numbers coming back a little better, and we'll start seeing rates come down. They're not going to be quick. It's not going to be a quick, fast move. Yeah. But they'll start leveling off. They'll start coming down, and bond makers will get more comfortable with the market, inflation data and all that. And they'll start saying, okay, we can start pricing mortgage loans a little lower, and you'll see rates start coming down. And that'll be a cycle that could take a whole year for us to find some kind of a bottom in the rate market. But my prediction, I think long-term, we're probably going to end up in the mid fives, and it's going to be there for a long time.
Which honestly, forever speaking, you know what I mean? That's the good rate, honestly.
Historically, absolutely.
Yeah.
I mean, my father was a builder and developer in the area, and he's, we have this conversation all the time. He's like, when I was building, it's, 16, 18%, and we couldn't build fast enough. Mm-hmm. But I wonder, data, and this is something I haven't looked at, like the income back then based on a $40,000 house versus
Correct.
Income now, and your average house being 350 plus. Yeah. It's like, is it the same? And there's a lot of struggle right now with people trying to qualify, first-time home buyers trying to get in there, people who need to upgrade their home. It's like they're looking at all of this and they're going, the price of real estate is exponentially higher, and rates are higher, so and insurance is higher, mm-hmm. and taxes are higher, and so it's created a real challenge. How long can that go on for? I don't know. We don't have enough inventory mm-hmm. to really offset it. It's a mm-hmm. supply and demand.
Yep. So you're in the industry. Are you seeing I hate to even use words, but like more bankruptcies, or is there some sort of an indicator on that? You know, in our area, nationwide or whatever, how is that?
Yeah, there is a large amount of consumer debt right now.
Yeah.
You know, that we watch, and it is slightly concerning, but you know, the most recent data I looked at, which also involved household savings, was surprisingly higher, and that might be from some of the COVID money, you know, that was out there and available to people. And so I think that ultimately the consumer debt could be an issue, but we're not seeing it, you know, correlate to massive amounts of bankruptcies, foreclosures just yet. As a matter of fact, you know, like I watch the market very closely as far as real estate goes. And I mean, a year and a half ago, you couldn't find a foreclosure on the market in all of Florida. Now there's roughly, last time I checked, there was like 600 or 700 for sale in Florida. So it's creeping up, but it's not like numbers that I remember seeing back in 08, 09.
I bought my first house on a short sale. I mean, it took me like 6 months, but
yeah, short sale. You haven't seen a huge uptick in any of that stuff, and the reason I think is because values have come up so much.
People got equity, so they just sell it.
They got equity, so they're able to get out of it. So we don't know how many people truly are in trouble and were able to get out of trouble. Like, we don't know. It's hard to say, right? And that we may not see that fleshed out for a couple of years to really understand the true breadth of what all of this inflation, these costs, like the cost of living and everything, is actually going to do. It's an interesting time. This is one of the only times I'd say, like, it's hard to predict anything and be right, but I'd like to think after Q3 we'll start to see inflation at least stop or be under control in some respect and start receding, and mortgage rates will follow from there.
Yeah, we have guys here and they make really, really good money. You know what I mean? And it's still tough for them to get out of that renting.
I know.
You know what I mean?
And I talk to people every single day in that same situation, and it's our job, like, to just be very honest, transparent, and deliver the news they need to hear so they understand what it's going to take. And it's hard sometimes. Like, you're looking at it and you might have a guy that's, making $80,000-$90,000 a year
or more.
And because of the cost of living, other expenses, other debts that they have and things like that, it's like, it's hard for them to find a home that will work for their needs at that income level with all the other debts that they have. It's a unique time, man. In 22 years of doing this, this is probably the most challenging I've seen it for the consumer.
And people, like I said, people are all making more money, but not as quick as the value of these houses have gone up, as the interest rates, as insurance, and it's crazy.
The food, gasoline, everything. You make more, but everything costs a whole lot more. So it's like, it's hard. It's really hard, especially because most of these borrowers, when you're talking about, pre-COVID, totally different story, right? Most of these guys and these individuals, and they were able to find a home that fit their needs, afford it, and get into it, and financing, everything worked, and so it's a challenge right now. It's definitely different, but I think even though it's a challenging market, I think it's a very, very good market for people to buy in right now, because there's not as many buyers.
I'm starting to see that, so I could start seeing it shifting a little bit to a buyer's market here.
My concern is it's, right now, buyer's market. As soon as rates drop, we're going to go back to pandemonium, where people are bidding $20,000, $30,000, $40,000, $50,000 over asking price. And, next thing you know, you have a market that's much higher than where we're at even right now. And so I'm trying to explain that to people. It's like, hey, I know rates are elevated and they're higher, but at least if you buy now, you're locking in the price of the home now. And then if rates drop and prices go up, you're going to benefit from that equity appreciation because you own the home, but we can always refinance the loan and get you a lower rate later when rates come down. It's not going to help if you wait until rates go down and the price of the home goes up $50,000 or $100,000. The payment's going to be the same. You got a lower rate, but the payment is going to be the same because you paid more for the house. So we're trying to analyze that, look at that, and explain that, in a way that anybody can understand it, because those are some of the inner workings of the market that I see right now. I feel like it's a good time to buy.
Yeah. And I see stuff coming down, but you know, even my dad's been in real estate his whole life. You know, he buys and holds. He has bought a lot in 2008, 2006. I mean, throughout times where it was up and it came down. In the end, if you hold it, you're going to be okay.
Right.
You know what I mean?
Yeah.
And be successful.
Yep.
So it's like, it's so hard to, what I'm saying, it's so hard to time the market. You know what I mean? And we're in such a hot state where you think like, oh, maybe it's going to crash again. I'm going to be able to buy a house for $100,000. And I don't see that happening.
No. Listen, I can say that with a pretty high level of certainty. When you look at the you just got to look at the demographics of the situation. How many, the population, our aging population, they're becoming first-time home buyers. Like, the amount of people that need to buy a home right now far exceeds the amount of homes that are on the market. We stopped building. A lot of builders, we stopped building and developing after 2008 for a long period of time. They were like gun shy. So we were underbuilding all of this time. And now we've got a bunch of people that are rate locked in their home. You know, they don't want to sell because they might have a 2 or 3% rate. So we're not seeing those homes come on the market. And so our inventory and where it's coming from is very limited, and it's always a supply and demand thing. If you have a low supply and high demand, prices will stay elevated, and that's what we have right now. Yep. And I don't know how we're going to get out of that just yet. I don't see a clear path forward to fixing this just yet.
They still can't keep up. That happened during COVID too, because they thought, hey, this is the big crash. So all the builders are like, hey, no starts. We're not doing anything. And then all of a sudden they got a couple months behind, and then there was more demand.
Yep.
And that's what shot everything up even crazier.
Yep. It's a challenging situation, a challenging market. It's unique. I haven't, like I said, 22 years. I haven't seen anything like this. You know, my dad's 85. I try to ask him, and he's like, you know, we've seen situations, but not similar to this. Like, I've seen something similar, but not exactly like this. You know, we have a bunch of federal debt. You know, the country is in debt up to its eyeballs. Like, there's so many factors at play with this market. It's like, it's anybody's guess right now on a macro level of where we go and how this all works out.
Yep. So I got 2 more questions. So first one, what was a success story that stands out to you that you just helped a client and they maybe didn't think they were going to get a mortgage, or what kind of a cool story do you have about that?
Yeah. So, and I'll go back to, we get these calls a whole lot from people that are in the process and they all of a sudden got denied. And one in particular, this probably happened, I don't know, 8-10 years ago. I got a phone call. Individual was supposed to be closing. They were at the closing table. I don't know how this happened. I have no clue, but apparently the bank that was handling it had lost their application, didn't have any information on them. It's unclear as to exactly what happened or how it went down, but we were able to get an extension on their contract. We vetted them. We dropped everything, vetted them quickly, got an extension on their contract, and we were able to close them in about 9 days.
Wow.
And we were able to save them, get them in their home, and like, they were very grateful. So that was probably one of the coolest stories. You know, terrifying for the individuals that had to go through it, but good feeling for us that we were able to make that happen.
In the end.
Yeah. Yep.
And then the other one I wanted to ask was, and you hear this all the time, you know, they're in the mortgage process or whatever. You try not to tell them to buy stuff. Have you had people buy crazy stuff? Have you and kill deals? Kind of a thing?
Yeah. Well, I always say this. It's like, hey, we vet every deal. Like, we guide you. We tell you what needs to happen. Yeah. But there are certain things that if you do it as a borrower, you're going to kill your own deal. And one of those, we've had people buy expensive sports cars, like right in the middle. That happened. That has happened a few times that I can think of. And, you know, just do it, quit their job, quit their job. We're a week away from closing. I just quit my job. They didn't think it was, going to affect them, but it did. So yeah, we've had some crazy stuff like that happen as well.
Yeah. I got this buddy, Derek. We got to kind of hold him back. He buying boats.
Can we block Derek from seeing this, please?
He wants to buy elephants and all kinds of stuff, exotic cars. So, hey, Derek, we got this whole loan thing going on.
He's an interesting character, that guy, Derek, No, he's a good dude. I love that guy.
I love Derek. Well, Justin, man, I appreciate you so much. I personally have learned so much from this
Awesome.
And I thought I knew not everything, but a lot. And you've really helped me. I'm sure you're going to help everybody who watches this and everything. So
appreciate you having me on, man. Anytime, always up for a conversation with a great guy and great company like you guys. So
no, and I like I said, I'm just so thankful that you have this program. They help so much of our team members.
Yep.
That's all I care about, because I'll end with this too, is we care so much about their financial well-being. We're a different company in which we have a 401k and profit sharing that goes in the 401ks, that a lot of people don't look forward, to that. So like my goal, and it may not even be their goal, but my goal is for, our employees to own a home, have equity in it, and be able to retire.
Yeah.
You know what I mean?
It's rare, like, for a company, to think that way. And I think that's why we align so well. And that's why the partnership between CPF and Kielty works so well, is because we have the same goal and mindset for our employees. And so it just made a lot of sense to build some type of employee benefit program, where Kielty employees, get a $500 credit with us.
That's what I was going to ask you. I didn't know if that was a secret.
Yeah.
Do you work? If you're another company or larger, you could create that for them too, right?
Absolutely, yeah.
Perfect.
And we love doing that for other companies and working with them to create an additional benefit for their employee. And aside from that, building home ownership, it builds a more stable, home life for your employees, and gives them the opportunity to build equity. And we want to be part of that and help, and then give them a benefit and help pay some of their closing costs as well, as part of that sponsoring, partnership. So, and on top of that, we always send a gift out on our behalf, and, a little housewarming, something for the individual. So they get $500 credit towards their closing costs, and a closing gift from us. And
now we appreciate that so much.
Yeah.
You know what I mean? That means a lot to our people.
Yeah. You guys have been great. All your people are always awesome to speak with. They're very thankful, and they listen, and, they're intent on finding that right investment for them, for their families. And we're right there to help them. And we're proud of being able to do that.
Good. I appreciate it, brother.
Absolutely, my man. Thank you. Thank you for having me.
Yep. Thanks, guys.
Yep. We'll see you.
See ya.